Good day, everyone. Ali here from Sophie Financial Network. Today is July 5th, 2023, after a long weekend, and we're just coming back with the market analysis. Today we had a very, very low volume market just because everyone just came back from vacation, long weekend vacation. Still, some people they're in vacation, summer vacation. They just stretch it to the end of the week. So that's why market volume was pretty light. But uh, we had a downtick today, so S&P 500 just came down just a bit, nothing special. I had a chance to go over with the market data again this last weekend, and there is one level that I just point out here, which is this area, which is 4261 to 4300. Which is coming to this consolidation area, consolidation breakout. We shouldn't go below this. Ideally, we shouldn't go below this wide range bar, which is the pole of this consolidation. And if I just want to mention a number here, we shouldn't go below 42.21. And that would be very, very spectacular number. Let me just, sorry. Um, Not here, here, right there. So that would be very, very decisive moment for the market. So there is going to be a possibility that we see another just hype to the upside, and that would be 44.77 to 45.12, which is going to be this top. And even we can stretch higher a bit, but I'm not expecting anything about 45.50 for now. I'm just looking for kind of like this type of consolidation or downside move to through the month of July, and then we can see another rally all the way to here to this area. But that would be the ideal scenario. So if we get a weekly close below this level, so ideally below 42.21, I should say we are getting into a bear market, and any rally could be kind of like a selling opportunity because we are going to test at least this October low or even lower than that, which is the bigger time frame tells me that we are getting into 3200 to 3400. If you ask me, I know that's going to be a wild and crazy, but if we get, again, so I just want to mention here for everyone, if we get any close below 4200, then we should see any rally could be still by sellers, and we are just getting another just down to here to this area, and then coming down and then lower low ultimately for end of this year, which is going to be very, very ugly end for this year. But if we get just kind of like movement to here and then holding up and then consolidation for the rally about 4,500, that should be the bottoming formation for new all-time high to 48 to 4,900 down the road. So that would be pretty interesting. So anything that we want to forecast, it's kind of like a tricky, just because we are at the bull market technically. But anyway, if you want to slice it and dice it, we are not in a good economy shape for the bull market. Inflation is high. Federal Reserve is going to push the rate, probably another higher rate. And the market didn't expect that. So market doesn't care for now, but they will care. They do care somewhere someday, and it's going to be a painful for market because any pivot or any type of like a rate cut could be ugly shape for the market every single time the Federal Reserve cut the rate. When we are above 5% and when they cut the rate, we just we were into the recession, and that was the reason Federal Reserve cut the rate. And market just to show a very, very sharp dip to the downside. So we just need to get more information right now. Yield curve just start to coming back up again from the conversion, from the inversion, and that is kind of like the forming shape for the recession. But this recession, Federal Reserve expect is coming very, very mild recession end of this year or starting end of this year. I don't know, to be honest, about mild, about a soft recession, soft landing, or something like that. I know that every single time that Federal Reserve gets above 5%, they break something. And right now we are at kind of like a 5% right now. So it's going to be interesting to see how market is going to react. Stochastic wise, for the market, we are at overbought condition again for the market. So this bullish consolidation probably fails to the downside. And also, I just want to point out here, based on these indicators, like a MACD. So look at that. Here is the nice divergence in MACD while we have like higher high in price. So here's the higher high in price, but obvious lower, higher low. And here is another obvious higher low in RSI as well. So these two indicators are showing me a divergence topping formation here for the market. And also, we are seeing kind of like a bear reversal here happening. So probably all the other indexes as well, they're just showing the top information, at least for the short time. So we need to see, we are due for correction, folks. There is no question about it. We are due for correction. But this correction could be the beginning of the bear market again, or that would be just a simple correction and leading us to the new all-time high by end of this year. So just keep an eye on this, and we will see how it goes. We are just going day by day, week by week, and see how it goes. Moving on to the Nasdaq, and the Nasdaq, just the only positive index today was Nasdaq. However, the positive one was very, very light, a doji positive bar, bullish consolidation. And Nasdaq is the one who is, which is showing us kind of like a very, very weakness on the top. I know that it's kind of like a leading the indicator, but price action wise, even if it didn't get to the higher high, just showing the lower high or double top here, while S&P 500 just hit the double hit the higher high. Right now, Nasdaq is just forming for another upside move based on the MACD. However, this and this, I mean, like RSI and the stochastic just showing weakness to the downside. So it's kind of like mixed signal from indicators, which is kind of like a very, very, I should say, weak signal from the indicator. I don't rely on the indicators at all. I just getting them as like auxiliary help for my price action reading. But right now, Nasdaq is pretty stretched, pretty overbought. Any chart like this, if you see any chart like this, it's going to be due for a corrective move. And if we get a corrective move to here and then holding back up again, so that would be a nice scenario. But if we get down to here, to downside here, if we break out this, so that would be kind of the scenario that I'm looking for, especially below 13,400. That could be kind of like the ugly scenario for Nasdaq. So what do I mean? I mean, like if we get a weekly close below this level, any rally could be sold off by sellers. And that's going to be just leading us to the new low, possibly in 2023. I'm not saying this is going to happen, but if we get a close below this, most probably we are getting to the new low for NASDAQ in 2023, early 2024. So keep an eye on this level because these levels are very, very important. Anyway, if you want to slice and dice it, market is stretched over about and due for corrective move to the downside. And I know that lots of people, they don't like to hear that, but anytime we can get back to the bear market. So just the bear market is pretty close to us. However, we are not in a bear market yet, but we need to just keep an eye on this because any close of this can dump us to the bear market again. And we are at the earliest stage of the topping forming for the market. So again, I'm not sure if this topping formation is going to be just a corrective move to the downside and then getting back to the rally, possibly to get to the new all-time high, or at least double top here around this area, or it can just get close below this, and then any rally could be sold out by sellers, and we are just getting to the new low, which is going to be A and B and C wave to the downside, which is going to be the same scale like this. I just want to mention that if we get back below this, the scale of sell signal is going to be huge. And it's going to be something like this, something like the old 2022, which is going to be ugly year for 2024. So it's going to be lots of buying opportunity there, but for people who are just getting into the market right now, it's going to be ugly. It's going to be the same scale of the drop here. People are just getting to the market here with this minor corrective move because they just thinking of these ones are going to be corrective move, but ended up to here. So it was very, very painful for lots of people. So just again, be careful. I'm not saying sell or kind of like hold or buy or something like that. I'm just saying just be careful. Manage your positions, manage your portfolio, diversify your portfolio, rebalance your portfolio as required. If you ask me to buy any technology stocks right now, probably not a good idea to add to your position. If you have already in good price, like myself, I'm gonna hold on it. So even if it goes to here, I'm not gonna sell because eventually it's gonna go higher. But risk to reward to add some of those good names here, it's gonna be very, very low rather than here. The risk is gonna be high and the risk is gonna be low. Obviously, it's gonna be low here. So I would rather to keep my position because in this downdraft, I just added, especially here. So I don't mind to go back here and even this double bottom or even lower low to add more to my position because I cut some of my semiconductor in the stocks and also kind of like a rebalancing my portfolio. If you like to join to our portfolio monitoring to our investment channel, make sure that you send text to me because I'm gonna lead you how to maneuver yourself with my portfolio. It's going to be a live portfolio. It's going to be visible for everyone. It's not going to be a demo or something. It's going to be a very, very interesting, I should say, interesting opportunity for everyone to see, kind of like a defensive portfolio. I'm not going to cowboy in the market. So the total downdraft, the total drawdown for my portfolio in this area was 25%. Just imagine lots of people just get hammered 80%, 50%, something like that. My total portfolio drawdown during this downdraft was just 25%. Right now, we are about 20% overall. So, which is fantastic because we beat the market nicely. Market still is not in an all-time high, but we are just making money. We are positive. We are great. So this is kind of like the portfolio management that I'm just looking for and giving to my subscribers as well. Moving on to the Dow Jones, and Dow Jones just coming down today. Just a down tick still is in consolidation phase. I'm expecting Dow is performing better just because energy stocks and also I should say gold and miners. We will get to those ones as well. I think they are just forming the bottoming formation. And right now we should see kind of like a good price action from gold, a bond, energy, and also the other ones that are already hammered. So if you just look at the Dow Jones, here is just the reverse of that shoulder. And right now we are just breaking about this neckline. The neckline here has been broken. So we just back tested going to this. Any close, this bull flag, it could just stretch another choppy consolidation. But eventually, if we get above 34,600, that could be kind of like a great, great signal for bulls because we are heading, I believe, to the new all-time high. So I'm not surprised to see Dow is getting to new all-time high while the other stocks are lagging. And the Dow 38,000, that could be a possible scenario for 2023. However, for the short term, we are at kind of like divergence here. We are at a double top formation for the short term time. So we can see kind of like a pullback here to this area, but that would be just a pullback. I'm not expecting a crash or something in Dow Jones because they already hammered, to be honest, and there's nothing wrong with those ones as well. Moving on to some individual names, starting with yield. Yield, just a positive price action. To be honest, kind of like a surprising me. Another bullish consolidation. Everyone is expecting another 25 basis hike, and that would be kind of like a bullish. Is this going to be a double top or just a nominal high compared to this one, and then coming down, or kind of like from here, just getting down? So still, if it goes to the double top or even a nominal high, that would be just obviously says I was wrong for the top because I thought that this is going to be the top for the yield, but seems like right now it's just a hiking up and forming a small bullish consolidation here. That would be prior this pivot, which any type of price action like this, it could be just getting crushed this pivot to the upside. So we'll see how it goes. But right now, yield obviously is in ending diagonal here, and this ending diagonal, if it forms below, I should say this hole here, which is a 4.7% to the downside, that would be kind of like the ending scenario for yield. Yield can just easily going down very, very sharply, something like this. And interest rate can go down as well. So we'll see how it goes. TLT just crushed today. So TLT not a good price action, to be honest. Just a 1% down. So because yield was up, TLT is down. So right now it's just forming this to the downside. If it continues, TLT can go to 98 to $97, which is going to be this gap and also smaller low. And even there's going to be a possibility to get to 94 to 96, which I'm going to accumulate more, to be honest, because this is kind of like the last drop, I should say, for TLT before the rally to the upside. So we'll see how it goes. But right now, we are just patient, staying on the side and keeping our cash in our portfolio. Gold just downtick today. So gold just coming down today to 1916. I believe this is the bottom for gold for now. So this kind of like needs to work out here for a bullish consolidation for next leg up to 1980. And even if get above a 1980 to 2000, that would be kind of like testing a double top or even new all-time high. So, but gold needs to hold this area. So that's going to be big assumption behind that. So if gold holds 1890, that would be kind of like this could be digested move for the upside. So we'll see how it goes. Obviously, Federal Reserve increased the rate 50 basis or so. So that would be kind of very, very bearish signal for gold, and we'll see how it goes. Crude just another uptick today. So crude is just showing kind of like a bottom information here. At least this is gonna be a multi-month bottom. And if we get above, again, 74, 75, so crude needs to get close above 74, 75, which is gonna be this supply area. Tested once, and this is the second time. So if we get above $74, $75, we can go all the way up to here, which is $80, and then getting rally, substantial rally for 2024. Not this year, but this is kind of like very, very interesting because if you see crude is kind of like very, very frustrative move. And this is kind of like the bottom information, multi-month bottom information. And in this multi-month bottom information, you can see it spike down to the lower low, something like this. But look at the reaction after that. Immediately, it can go up and just consolidating above this. Right now, crude is something like that. We can't see another spike low to here to 61 at the same time, but we should see a reaction after that. If it's just a jump back, something like this, and consolidating, that would be kind of like the bottom information. And this can lead us to a substantial rally for end of this year and also 2024, which I'm kind of like a positive for energy stock and crude. VIX just had an uptick today, but look at the optics. So it was kind of like a jumping to the upside, but coming down. So it seems like there is no panic in the market. Still, the traders they don't believe this is going to be a top information. It's just gonna be a corrective move. So that's why VIX is kind of like a stellar here. So we're kind of like a technically reacting to this area, but any close about 15, 16, so that could lead us to $20 VIX down the road. And it's going to be a spike index, pretty sharp move to the upside when we get something like this close above this. Back test could be sharp and move to the upside. So we'll see how it goes. 60 is coming up today. So this 60 shows pretty nice. Let me just clear this stuff. Yeah. So Dixie just had the uptick today. It's kind of like coming along with a bond yield, and right now it's just coming back again. So if we get close above this 105, so it can lead us to 106, even this top. If we don't get close above this, so that would be kind of like probably just a 104, maximum 104, and then coming down again to the level. So it's kind of like a forming in this triangle pattern. So we can see kind of like a coiling here to the downside. I'm looking for kind of like 100 to $95 Dixie, but we'll see how it goes. This consolidation area, look at that. It's going to be 97 to 99. I'm just looking for kind of like the bottoming formation here for a good buying opportunity, not now, obviously. Moving on to the technology sector. So starting with my index, Magma, which is Microsoft, Apple, Meta, Amazon, and Google. So this one, we had like just a nominal high here, but just sold off by sellers. Obviously, there is going to be kind of like important area here, which is 109 to which is 100, 1100 to 1180. So this area could be a top information. But right now, just above 20 SMA, which is kind of like a bullish momentum for now. But as you see, obviously, we just lost the momentum on the upside. So it's kind of like a very, very, very choppy consolidation. It's kind of like an exhaustive move to the upside. If it just break below 10.4 or 10.20, that would be kind of like a selling signal. And this selling signal could lead us kind of like a 15% to the downside. So that leads us to the next stock, which is Apple. So Apple just came down today. So if Apple get close below 182, that would be kind of like a selling scenario for 163, which is going to be a kind of like a 10 to 15% downside move. Amazon just the 16 cents to the upside, but look at the candle. So I told you this is going to be the selling area. This is going to be our target box for a lower low. So which is going to be this area, 112 to 115. That's going to be the first scenario for Amazon, and just forming ending diagonal here, just pretty close to this top information. So we'll see how it goes. Moving on to Meta, pretty substantial move to the upside. But later of the session, just the sellers that took the position. Right now, we are just getting into this. To be honest, this is above my expectation. I'm happy to have this. And I just cut my position gradually here on the top here. So that was the first sell for the Meta 285, which I did a I think 2 weeks ago or last week. I can't remember, but still, I'm happy to just cut my position because it was over my percentage allocation. Right now, it's just at the range level. I don't want to sell Meta. I will keep my position and I will add if it goes here below 200 or even lower. So we'll see how it goes. When it happens, I don't know, but I'm not going to sell my position for Meta, even with the corrective move to the downside. Microsoft, obviously, it's not catching up with the other technology indexes. So we are just, Microsoft is struggling on this SMA 20, which is kind of like the momentum line for the market right now. So if we get close below 325, it can go all the way down to 292 to 299, which is going to be a 300 level for Microsoft. This is one of the best, but right now it's just losing the momentum. Obviously, can go down deeper to 269 to 276. It depends on the corrective move to the downside or the correction for the market. So we'll see. Again, we just need to coming along with different stocks, different levels. The one that I explained for S&P and Nasdaq, that was kind of like interesting to see how market is going to react. Google, nice optic today. We just getting close to SMA 20. Is this going to be a good buy? Keep to SMA 20 and also this level, and then reversing back down, or it's just going to be another consolidation, a nice rally to the upside to 128. So we will see how it goes. But I believe that Google is just forming a top information right now. So this is going to be another probably lower high, and then we can see a rollover. So this rollover, if it takes out this pivotal point, which is 116, then it can go all the way down to 1.7. That is very, very interesting to see how Google is going to react to this consolidation. It's pretty nice area to see, to watch for the next buying opportunity. Netflix is $4 to the upside, nothing spectacular getting to this gap fill. So it's going to be in the gap window now. It can stretch to the gap fill to $500 if it has a momentum, which I doubt for this stage of the game. Tesla pretty nice gapped up on Friday's session, and today it didn't roll over. It just followed through and just closing a better price, $2.66. Rivian as well going up. So that was kind of like a good news for electric cars right now. So Tesla is kind of like a beneficiary of that one as well. Semiconductor index, they were weak today. So that was kind of like the weakness for the market because semis are not that strong. So we need to get close above this or below this. So that's kind of like in no man's land right now. So uh, probably some people, some novice traders say, Ali, what are you saying? I'm just looking for a precise forecast or something. We are not forecasting, folks. We are just watching the market, see what is our momentum. Based on a bigger picture, this is overstretched. This is overbought. We are not going to buy here, right? So that is clear for me. At least this is not my book. This is not in my book. But if we get close, a daily close below 145 to 147, that means any pullback could be a selling opportunity and it can go down to here, to this area, to this consolidation. This is going to be a very, very interesting level, which is 115 to 120. So that could be kind of like a buying opportunity. Right now, if you want to sell, you have got a better risk to reward because this is going to be your stop. If you stopped out, you're going to just lose $5 or $6 or so. But if you want to buy, where's your stop? Stop is going to be here. Probably the market just getting here and then coming back up and then getting here and then coming back up. So you will be frustrated for the buyers. I would rather to buy here, somewhere around here. So 110, 115, that's going to be a good buying opportunity. Nice, better risk to reward. So we'll see how it goes. Stocks, the same pattern. So if it goes below this, 482, let me just put market in my chart as well here. So this is going to be the level 482. So that's going to be the level for the stocks. TSM, $2.16, which is coming down. Obviously, this is not a good chart for gold. This is a good chart for bears. Look at that. So even this one is leading semiconductors to the downside. Possibly 78 to 80 is coming down the road. So we'll see how it goes. AMD, just $1.87 is down today. So AMD, we just sold out lots of our position and we're just watching for better scenario to come back to this name. Right now, it's in a sell signal right now. So obviously, this is a very, very typical price action. So we have this sharp move to the upside, obviously failed to hold the upside, coming down, taking out this pivotal point, reacting level. This is a nice goodbye kiss. And right now, it's just coming back down again to 92 to 95. This is very, very easy classical situation from the TA if you wanna see that. Nvidia, this one is coming down today. Better price action compared to AMD and TSM. But if we get close, obviously below this level, that's going to be ugly for NVIDIA. So we'll see how it goes. Texas Instrument coming down $3.20. Lam Research, we just sold out very, very nicely. I have no allocation on this because I believe this is top. And right now, just today, $23 coming to the downside, 3%, 3.44% to the downside. Moving on to financials, XLF, obviously, they just hold up pretty nicely. So nice bullish consolidation. If you ask me, just forming here for another leg up to the upside. So we'll see how it goes. XLF holding up for now. And moving on to the KBE, which is a large cap bank ETF. This one as well. So this one is forming another bullish consolidation. Nothing wrong with it. KRE as well. So this one, 55 cents. 55 cents to the downside, but nothing bad, nothing good, just a bullish consolidation as well. And JP Morgan, this one is not good. So this one just to take out this pivotal point and then coming down sharply. So needs to hold out this pivotal point, 137. If it goes below this, that's going to be ugly. Goldman Sachs, $6.56 to the downside. Bank of America 12 cents to the downside, Wells Fargo just 8 cents to the upside. It's better price action actually. If it goes above this dynamic trend line, it can go to 44 to 40, $45. GDX, which is the gold miner, sharp sell off today, just coming down ugly, 2% to the downside. So they don't follow the gold price because gold price was not that aggressive, but this one is coming down. So we'll see how it goes. GDX is kind of like forming, needs to hold out this pivotal point, if you ask me. GDXJ just $1.03 to the downside, but look at the engulfing on the top. So it needs to hold out this pivotal point or this as well. So probably we are seeing another lower low, but we should just hold above this. And even if it goes higher and take out this pivotal point, then we can see pretty clear buy signal. But right now, it's not there yet. So AEM, $1.21 to the downside, the same price action. NEM as well, the same price action, just coming down. Franco-Nevada, ugly price action. Look at that. So we had this sell signal before, but they formed the bottoming formation. Right now, it's just forming again another time. So we'll see how it goes. Gold barrick, pretty sharp decline to the downside. So nothing I have to say. It's just in no man's land. It needs to hold out the pivotal point. It needs to take out this one for showing the sign of life for the gold miners. Moving on to the energy sector. Energy sector actually surprisingly it was pretty mixed. I assume that they're gonna just have better performance just because crude had a positive day, but they came down just because they are at the resistance area. They need to hold up or showing like a consolidation here. XLE, which is 45 cents, 61 cents. XOP, just the downside. OIH, 35, 34 cents to the downside. So it's just getting into this pivotal point. So this is kind of like interesting to see how market is reacting. But if it goes here and then can hold up this 280 and then reversing back up, so that would be kind of like a sign for bulls. And if we take out this, you should see this area, I should say, 312 going to be down the road. So let me just mark it on my chart as well. So 312, which is going to be this area. So 310, let's say that's going to be middle of this white range bar in this hidden supply area and also this one as well. So we'll see how it goes. XOM, Exxon, just on the resistance area, 55 cents to the downside. Chevron, 90 cents to the downside. But look at the shadow on the bottom. So it's kind of like a nice see buyers are coming back. Oxy actually doing well. I know it's kind of like a forming a consolidation. Right now, it needs to hold up pretty well this area, 58. We can see another spike to the upside. So we'll see how it goes. And the next one is going to be REIC, which is going to be 4.54% to the upside. This is one of my favorites. We are above this triangle, and we need to close above this. I told you above this 7.3, which is going to be this pivot, we are getting into $8 and then $12 stock. So we just passed the first step. We are heading to $8 stock. But if we get above this, I should say $12 stock is coming down the road. It's pretty wide forecast, but it's in my portfolio for a while, and I'm just looking for making good money out of it just because if crude is going higher and higher, this one can outperform the other energy stocks as well. It's kind of like more than usual analysis, but it's kind of like after long weekend, so I think we were due for a good analysis video. Hope you enjoyed this video. If you like this video, please smash the like button, subscribe to our channel. I will see you tomorrow on the chart. Have a good one. Bye-bye.